welcome to Remy Trade, and this is the home of successful traders. And one thing you will do for me tonight is to help subscribe to our various groups or channels. For example, if you come here on YouTube, Remy Trade, this is our cryptocurrency group specifically for cryptocurrencies. So you can help us subscribe to this channel, and I so much appreciate. And then the other very little channel that I also wanted to subscribe to is our Forex channel. Subscribe to our Forex channel, Remy Trade Forex. This is only 344 subscribers. So if you can do justice to this right now and just go on YouTube and search for Remy Trade Forex and then subscribe, or Remy Trade and also subscribe. The links to these channels will be on the various WhatsApp group as well, but you can directly search on your YouTube browser and then get subscribed. All right, so like I said earlier, tonight I'm not going to take much time, maximum 1 hour, and then I'm done. And before we go straight into the training, these are the Remy Trade services. We have cryptocurrency training, we have Forex training, and then we do cryptocurrency signal service, Forex signal service, and crypto and Forex account management. These are the services that we offer. And then if you come here to my WhatsApp, this is the premium signal group, and this is our result last month. This is last month results. You can check here very well. We have a total of 19 trades. We have 12 wins, 2 losses, and then 5 at break even, and the total win here is 570%, and the loss here is 60%. Everything is both features, margin, and spot trading signals. This is a very amazing training. And this group, if you join this group, you will be receiving this signal in this proportion. Remember, it may drop as the month, maybe the signal goes, but we are always in profit. And then another important thing here is the training. Remits have different training for students that enroll and come into our own community. So we have here the beginners group, and then we also have the advanced group. That means when you've been trained from the beginning, the very beginning of cryptocurrency, and maybe trading, when talking about technical analysis, you will also join the advanced group. The advanced group right here is where people that I have trained from beginning of cryptocurrency to advanced. And if you look at this group right here, we are about 2021 participants that is in this group, and this is where I have my most effective and efficient traders, people that have been trained from the very beginning of cryptocurrency to advanced level, and they are doing very well. So you can decide to join us by taking any of these courses. Either you take the beginner course or the advanced course. And then if you look at this very area, we have discount offer right now on almost all our courses. Discount offer right now on almost all our courses, which is very important. You can take advantage of this very offer, which will also be available. You will see it in the group after the training. We have all courses on discount because of this very training tonight. So you can check all these training and services out, and then we greatly appreciate. So let's dive right into what we have for tonight. So tonight is cryptocurrency trading hacks that guarantee success. I am going to be showing you what you need to do for successful trading. Success is not only does not come in one day. Okay, success does not come in one day. It's a gradual and consistent process that makes you successful. And then for your information, if you are just joining the training, please mute yourself. And then if you have any question to ask me, please write it down so that at the end of the training, I will give you the opportunity to ask your question. So just do me a favor by muting your mic button. Just mute it, and then at the end of the training, you'll be given the opportunity to ask questions. So cryptocurrency trading hacks that guarantee success. And in the course of this very training, this is what I will be covering: spot trading basis. And then the second thing I'll be covering is $50 per day scalping and day trading secrets. I believe these are all the things you saw on the flyer that is in the various groups. And then how to be ahead of 99% of traders. It is my own core interest for you to be ahead of traders, because the trading game is an emotional and greed game. So either you are too emotional or you are too greedy about the market. So how can you bring these two things together to be ahead of the market, plus your technical and fundamental analysis? So you need to be till the end of the training. That is why you need to stick around. Okay, so we are going to start with spot trading basis, and then after that I am going to show you a very powerful and strategic scalping and day trading strategy that you will use right now, even though you don't know how to trade at all. That let's say, for example, you are very new in trading, you don't know anything about trading. At the end of this meeting, and I give you this very strategy, you are going to apply it immediately and it will work for you. Then secondly, how to be ahead of 99% of traders. And I know that most of you here, if you've been trading for a while now without result, or you want to still be ahead of a lot of traders like myself and other of my students that have trained over the years, then you have to also stick around till the end of the training. All right, so let's dive into around. So what is trading? Trading is any activity where you exchange something to someone in return for something else. That's trading. So it's any activity where if you give something to someone, then that person will give you something in return. So if you look at it in life, we have, in fact, life is full of trading. Anything you do in life that involves exchange is trading. It's not necessarily money. Okay, it can be your knowledge. You trade your knowledge for money or anything else. You have to understand what trading is. So cryptocurrency is not an exception. This is what we do in crypto as well. So in the financial market that you trade cryptos, stocks, bonds, forex, and options, this is what you will be doing. Spot trading, also known as spot transaction, this refers to the purchase or sales of cryptocurrencies or other financial instruments at instant delivery on a specified date. I will explain very well when I go to Binance platform to do practical demonstration of what it is. And then in cryptocurrency, the exchange rate to which a transaction is based is referred to as the spot exchange. So when you start trading, and if you buy or sell, that particular exchange that you buy or sell is called the spot exchange. And you must have to understand that. Now on Binance right here, this is my Binance account. On Binance right here, if you look at it, if I go down, you see I am on spot. Right at this it says spot. This is where I perform my spot transaction. And then if I come here, you can see cross 3x isolated. This is margin trading. But for today, I am not going to be doing margin trading. So I will be doing spot trading. So let's go a little bit further. Spot trading, we have different markets and market pairs. You have to differentiate between what a market is and what a market pair is. And this thing applies to every other cryptocurrency exchange. Okay, it's the same thing. So if we say a market means that you are going to a particular market to buy something. Just like you can go to any market in your locality to buy anything. Let's say, for example, you come to USDT here. This is USDT market. Why is it called USDT market? Because USDT is all on the right of this. If I come to TUSD here, it is called TUSD market because TUSD is all on the right. And then if I come to BUSD here, it's called BUSD market because BUSD is all on the right. This is a market. So in this market of BUSD, we have different things that are being exchanged. For example, 1 inch, ARF, CA, and then we have CHA, and then we have ACM. You see, ADA, and the rest of them. So all these are what you can exchange using BUSD. Now, when we talk about a pair is a combination of two digital currencies or if you talk about forex, is a combination of two country currencies. But in this case, in crypto, we are talking about two digital currencies. For example, we have 1 inch and BUSD. So this is a pair in the BUSD market. So we have this pair, we have ACA pair, and BUSD, we have this pair, this pair. So when you trade cryptocurrency or any other financial market except the stock market, you are trading in pairs. So there is this common saying that says currencies are traded in pairs, be it digital currency or fiat currency. So that is what I mean by market and market pairs. You have to understand this because it's very, very important. Now, the next thing I'm going to be talking about is types of market order. So if you come to Binance and you want to take trade, you have options to take your trade. Either you use any of the market orders. So we have some major types of market orders. For example, here we have, in this case, remember I'm on spots, we have limit order, we have market order, and we have stop limit order. And then we have another one, OCO order, which stands for one cancel the order. Okay, these types of orders are what you can use to place trades in the cryptocurrency market depending on what you want and what you are looking for. Now, for the purpose of this training, I will be limiting myself to only market order, and if there is time, I'll go further to do a limit order example. So let's say, for example, you just come to Binance newly and you have deposited maybe BUSD or USDT in your account, and you want to take a trade. You don't know how to take a trade, and then you come to this interface. Don't be confused, and then what you need to do is to go down. Once you go down, you see spot. Don't place here, neither here. You see spot. Now choose markets. A market order that you want to take means that you want to buy at the market price, instant market price. So we call this one instant execution. So a market order is an order you place in the market to buy at the current market price. So let's say, for example, in this case, if I want to buy BTC BUSD, remember, you must have to choose your pair. In this case, I'm trading BTC USDT. If I want to trade AGIC BUSD, I will click on AGIC BUSD, but I must ensure that I have BUSD in my account. But in this example, since I don't have BUSD in my account, I will be using USDT. So under USDT market, I will now choose BTC USDT. If you like, you just search here BTC USDT. It will appear here, and then you click on it. Once you click on it, it will bring out BTC USDT interface for you, so that you can trade right here. So what I will do here, after you choose your pair, the next thing you have to do is to place your trade based on the market order you want to use. So in this case, I want to use market order, and I say the market order is an order you place in the market to buy at the current market price. And then the current market price right now is what you are seeing right here. Okay, so for BTC, this is the current market price, 30.186 or 3 as the price change. And then I will also come here, and then I want to buy Bitcoin, and I have 37.25 USDT. What I have to do is I can buy half, but in this case, let me buy all. Okay, then this is the quantity of Bitcoin I will have, 0.00123. I'll click buy. Once I click buy, okay, so I will just write it out, 1.00132. I'll just write it as 0.0013. 0.0013. Okay, then I'll click buy. So you see market buy order field. I have already bought BTC. Where is BTC? See it here. And then if you look at my USDT, it has reduced to 1 USDT. So I have already buy BTC with my USDT. That is how you buy and sell. So if I want to sell back my BTC that I bought just now, I can equally sell it back immediately. So all I have to do is to come here and put this value here, 0.00136, and I'll click sell. Order executed. You see, my USDT is back. Don't mind the increase in value. I have little BTC before I execute the trade. That is why the increase in USDT. So you can do this as much as you can, buy and sell, buy and sell. So what you do in spot trading is, after you analyze your markets, technical analysis or fundamental analysis, and then you believe that the market is going to go up. Let's say, for example, this is spot trading. So you have to buy. Let's say you buy at this price. Let me do it again. I buy at this price. I will buy again. So let's say I buy at this price, 0.00126. So market executes. I now have Bitcoin. Now, what I am saying in essence, what spot trading means is that I just buy at this price. I will wait for the market to increase, to go up. Let's say, for example, market rise to this very area. I will then sell. The difference between where I bought and where I'm selling is your profits. So what I will then do, if market have increased upward, I will then come here and then do what? Sell my Bitcoin into USDT. As at that time, Bitcoin price have already increased, so I will then profit from the difference between where I bought and where I'm selling. That is spot trading. That is spot trading. So those prices you are buying at is called spot exchange, directly on spot transaction. So another types of order you can also use is limit order. Limit order means that you don't want to buy at the current market price. Maybe you believe that the market is going to come down a little bit. Let's say, for example, you believe that this market is going to come down, and when it comes down, you want to buy at this price. So you set this price into the order book so that when market drop down into this place, it will automatically buy for you, even though you're not on the screen, you are not available on the computer to check the trade anymore. Or you can also set a limit sell. For example, like I said, if I buy here, market increase, I can set a limit sell here that if market come up to this point, I want to place a sell, and market will also sell for me. This is how you buy and sell in the cryptocurrency market with different order types. So let me just place one example of a limit order. Let's say, for example, I believe market is going to come down to this point of 29,900. Then I will then buy. What I will do is I will place on spot limit order, and then I will come here and I will choose the price. I have to put the price as 29,900 because that is where I believe the market is going to come to. Then I have to put the quantity of Bitcoin I want to buy. So once I put this quantity of Bitcoin, then I will then place the trade buy. So this market has been placed. If you look at it here, when market will come down to this price, that is when I will buy. That is when it will execute for me. If market did not come down to 29,900, the trade will not execute. It will remain like this until I come and cancel it. This is a limit order in practical terms. So for this example, this is how you place a limit buy order on spot. So I will come here and then cancel it, and then my money returns back to my account. Now you have to understand one thing, that any trade you place, be it a limit order or a market order, Binance charges you transaction fee, which is very, very minute. You can find that out yourself. It's not big, it's just a minute transaction fee that you will be paying. So having said that, another types of limit order is called stop limit. Stop limit is used for stop loss. You can check out the channel right here where you will see where I explain in detail how to place stop limit order and OCO order on this very channel. Okay, so that is types of orders and how to place a trade in the market with these different order types, which is very important. So you have to understand how to place a buy or sell order with a market order or a limit order, which is very, very simple. So a limit order is an order you place in the market to buy at a specific price. So you have to specify the price you want to buy if you are using a limit order. Why? For market order is an instant execution. So having said that, the next thing that I'm going to be talking about right now is $50 per day scalping and day trading strategy. Very important. I'm going to spend some time on this. That is why I just rushed through this very concept, because I also have a video on how to do this spot trading very well, which I'm going to also post on the WhatsApp group, and you can also check on the channel right here to find that outside as well. So I am going to be going back into $50 per day scalping and day trading strategy. Please pay attention and be very, very focused. So for this purpose, I am going to be opening TradingView. I will do this on TradingView. I'm going to open 2 tabs so that I can do a practical demonstration. Okay, so if you come to TradingView here, okay, it's coming up, just little network challenge. All right, so you go to products, and then I'm going to click on super charts. Go here as well, go to products, and then click on super charts. So right here I have my chart display right at this point. Then I'm going to remove this market watch. I'm going to remove this as well. These are the rules that you need to put in place to follow this strategy. Very, very important. These are the rules you need to put in place to follow this strategy. Like I said earlier, I have been using this strategy for years and it has been working. You can go back after now and back test it and see whether it fits your trading method. If it does, then you can use it right away. Okay, so the first thing here is higher time frame analysis. So you have to analyze your higher time frame first thing first. And what we're going to do to know the trend of the market is to put on the super trend indicator, which will help us tell the direction of the market so that we don't guess as a beginner, for example. And then the next thing is here is that we're going to go back to a lower time frame than the one you've choose. Then you put on the stochastic RSI, and then your percentage K have to be 8, while percentage D have to be 3. Listen attentively. And then you look for a failed swing after overbought for downtrend and oversold for uptrend. I am going to explain all this in practical terms. That is why I say definitely stick around. Don't go anywhere. And then the fourth one is 1 to 2 or 1 to 2.5 risk reward ratio. That means if you risk $10, your reward should be $20. Or if you risk $20, your reward should be $40. And in this case, it increased a little bit by 0.5%. And then your stop loss have to be at the previous resistance or support. I am going to explain this thing. Pay attention. And then the next thing, which is number 6, is the swing candle must close above, that is for a buy, or below the previous high or low, depending on if it is an uptrend or a downtrend. So once all this is put in place, then you are good to go with this strategy. So let's dive right in. Let's see how it goes. So right here, I'll go on my trading view. The first thing I have to do is, let's say I'm using BTC USDT. So BTC USDT. You see here BTC USDT. Then this is the 1-day chart. Remember, the first thing say higher time frame analysis first. Then I will put on the super trend. Where can I get the super trend indicator? You go to indicators and then you click super trend. Okay, this is what I want. This is the super trend indicator already on my chart. Then the next thing I'm going to do is I'm going to come here and I'm going to go back to the lower time frame. Remember, the second thing here is lower time frame RSI. This RSI stochastic. Okay, so I'll go back here, lower time frame. I'll be using 4-hour chart, and then I will change it to BTC USDT. So BTC USD as well. Then the next thing I'm going to do, remember BTC USDT on the 4-hour, BTC USDT on the 1-day, and then here I am not going to put the super trend here. What I'm going to do here is to put on the stochastic RSI indicator. So I'll go to indicator and I'll put stochastic RSI, the second one at this point. I'll put it on, and then from here I am going to change the parameter. Remember, the third thing here is, the second thing here is the percentage K should be 8 and D should be 3. So I will go back to this very time frame, which is a 4-hour chart. And then I'll go here to settings. On settings here, I'll go to inputs, and the percentage K should be 8. This is the setting for this very strategy. Then this is 3. Every other thing remains the same. So I click here. Okay. Alright, so here we go. Now, having done this on the chart, the next thing here is look for failed swing after overbought for downtrend and oversold for uptrend. Very important. Look for failed swing after overbought for downtrend or oversold for uptrend. Now, let me first of all explain what failed swing is. Let's say, for example, market was going up, making higher highs and higher lows in this formation. Then all of a sudden, the market come down. This very area is a failed swing. Market failed to create a new high because market was going higher. So market failed to create a new high. So this is a failed swing. This is a swing high. 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 Why? These are swing lows. This area is a swing low. This is also a swing low. So this is what we call a failed swing. The same thing too for a downtrend. Let's say, for example, market is going down. Market go down, go up, come down, go up, come down, go up, making impulses and retracements, and all of a sudden go up and then come down and then fail to create a new low. This very area is a failed swing in the market. So you have to understand what failed swing is. And then another one is, let's say, for example, market is going down. Let's say market is going down. Market go down, then come up again. Fail to create a new high of this one, then come down. In this formation, we want to see market fail like that. So after you've seen an overbought on the chart, that's on the indicator now, and then you look for fail swing that follows the overbought or fail swing that follows the oversold condition. This is how the strategy works. So let's say, for example, in this case, market is coming down. This is a clear downtrend. How do we identify that? The super trend indicator is showing us that market is going to go down with this region. Okay, this pink area now represents that the market is going down, and this trend is on top of the market. And market continue downward, making lower lows and lower highs coming down. Then on the 4-hour chart, I have to locate that very area on the 4-hour chart where market is going down. So for me to locate that, this very area was 18th April 2023. That is 18 and 19 April 2023. So I will go here and look for 18, this area. Okay, this very area is where the market starts going down. So what we're using to capture the trend is the super trend indicator first of all on the higher time frame, which is a Monday, and then we come back to the 4-hour chart. What we want to do is market should go down, come back up, enter into overbought condition. If you know how to use the RSI, enter into overbought condition. Now at overbought condition, don't buy. When allow market to go down, in this case, allow the market to go down. Then when market comes up, it should not create a high higher than the previous high in this area. Let's say, for example, from here, market drop, and then the stochastic RSI begin to come down below the overbought condition. Market begin to drop down. Don't short here. This is not where to short. Allow the market to come back and fail to create a new high higher than the previous high at this point. That is when you now short the market. This is when you have to short the market. The reason is because market has failed to create a new high higher than the previous high at this very area. At that time, it is ascertained that the market is not going to go up anymore, and you don't just have to short the market. You have to wait for at least one bearish candle, maximum 2 bearish candle, and then you jump into the market. Now the second thing here is your risk reward ratio have to be 1 to 2 or 1 to 2.5 risk reward, and then your stop loss at the previous resistance or support, in this case is resistance. Remember, this is where the market come out of what? Overbought condition for a short, and the market go up, coming down is where we want to take our trade, because market has already created a fail swing of this very high. So if I take a trade here for a short, and then I enter at the close of this very candle, remember the stop loss have to be above this very resistance as stated in this strategy. So I'll come here and then I'll place this stop loss around this area, and then I'll enter the trade. Remember, I'm looking for 1 to 2 risk reward ratio. Now with this, you should be able to take this trade confidently. You should be able to take this trade confidently. Now the next one again, if you look at this, it should give you more than 1 to 2 risk reward ratio. Once you place your stop loss at the previous resistance, in this case for short or sell, then you have to calculate from here where your stop loss is to where your entry is, then do your calculation to give you 1 to 2. That is, if you are risking from here to your stop loss $10 or $20, that may also mean that from here to this point should give you $20 if you risk $10, or $40 if you risk $20. This is the first example. This works perfectly. Remember, there is no holy grail in the market. Let's go further to see another example. If you look at this area too, remember market is in a downtrend, and what we have used to clarify that downtrend is the fact that the higher time frame, which controls the lower time frame, is in a downtrend. This is a downtrend right here. So the second example here is this very point. You see, market enter into overbought condition again at this very point, and then come out. So all this while market was going out and RSI is pointing downward, we are not entering the trade. Allow market to come up a little bit and fail to create a new high. So if you look at here, market from here come down, go up, fail to create a newer higher than the previous high at this point. So at this point is where I want to take my short position again. This is a perfect strategy. When will I take it? After the formation of this very candle, because this candle signifies that the market is going to go down. After this bearish candle, I will then place my short position. Let's say, for example, I place a short here at this point, and then my stop loss have to be at this resistance. Remember the strategy? And then I'm looking for 1 to 2 risk reward ratio. If you look at this, you see that this market, it still enter for us 1 to 2 risk reward with this. I know that the common thing that we were taught about maybe stochastic or RSI is to sell at overbought and then you buy at oversold. That is not how the market works. That is not how the market works. If you've been trading using this, you will agree with me that there are times when market is going up. You think market is going to go down because RSI is already at overbought. Market will still continue. And you will imagine whether this thing actually works. It is a lie. They're not telling you the truth. And sometimes most of these books that we read online is just to fashion our mind in a particular direction that will never favor you in the market. So instead of you to trade that way, this is a new way you have to trade from today. Don't use the common way of shorting from the overbought and selling from and buying from oversold. No, you don't do that anymore. Let's move a little bit further. Look at this area. Market enter into overbought. If you look at this point, market did not really enter, so we are not taking this trade. We are not taking it. We are only taking the trade that market enter into where? Overbought condition. And overbought condition on the RSI is this 80% above. Oversold is from 20% here below. So if you don't know how to use the RSI as well, check the channel. There is a complete video on how to use the RSI indicator. Now let's go. So at this very point, if you look at this area, market go down. So we see this. You are not taking any trade. Don't take any trade as well. Don't take a trade. Wait for a retracement, and it should fail to create a new high than this. If you look at this, this high is at this point, and the market stopped. So at the formation of this very candle, This very candle right here is where I want to take my trade. Because if we should shift this thing like this, you are not seeing the future like this. So market has already come down, and then right now market is going up and has failed to create a new high higher than this point. So what I would then do is to take a short position on futures. My stop loss should be at this point, so I'll bring it down to this area, and then 1 to 2 weeks reward. So if you look at this, see, market should hit your target. Market go down. You see, market go down, come up, go down, and then still come and hit your target. If we go further again, if you look at this area, market enter into where? Overbought condition. Come back, retrace, could not make a new high. Very, very important. Could not make a new high. And then the high of the market come down, could not make a new high, fail swing, and market crash back down. So you are to enter your trade when you see this very candle, which indicates that the market is going to come down again, because this candle is very significant. And as at this time, where is at the green light. As at this time when this candle was formed, the RSI, the stochastic RSI there, have been going down. So at this point we take a trade, which is a short position. So you take your shots at this point. Remember, stop loss at this resistance, not this current resistance, the previous resistance. That is how we teach in Remy Trade Academy. For some of you, you will place your stop loss here, so that if market just do small, go up, it will stop you, you will lose. There is a particular way you have to trade to outsmart others in the market. Like I said when I was starting this training, is that the market is full of greed, emotions. Don't allow your emotion to control you, and don't take intuitive trade. The market is very, very irrational. So I have to place my stop loss at this point, and then 1 to 2 weeks reward. You see, I should make this perfectly. What I am following as a trend formation is this very guy. Once I see this appear on the chart, this very green area or blue area, as you can call it, is representing that the market is going to buy. So I will stop looking for what? Short opportunity. I will then swing to buy. So in all these cases, they are all what? Short opportunities that you can take on futures, and it will enter for you. It will enter for you. Another example, finally, is this very area. See this very area. Markets go down from this very point and then come back up a little bit, and then with this candle, I am taking a trade here after the formation of this candle, which indicates that market is going to go down, and then at this point I'll place my stop loss, and then I do 1 to 2 weeks reward. If you look at it, this should also give us what? 1 to 2 weeks reward trade. And even if you lose, which some cases you will lose, this strategy work 95% of the time. 95%. So what you have to do right now is to go back and back test it. Go back and back test it. Now another example is at this very point. At this very area, you see the market enter into oversold condition. The reason why I want to use this example is very important, because one of the statements in this very strategy explain this very scenario. If you look at here, market go down at this very point on the stochastic right here. This is the area where the market enter into overbought condition, and then come out and retrace back a little bit. And then if you look at this area, you discover that the candle go up a little bit but close inside below this very high. That is the explanation of this very statement right at this point. Let me move this up. Say the swing candle must close above. In the case of a buy, or below. In the case of a sell of the previous high or low, this high or low means buy or sell. Okay, so in this case, in this very case, markets go up, come down, go up again, but the high was here, but it closed below this very high. So you have to take this trade. Already it's a fail swing. Market failed to make a higher high, so close below here and the market crashed back down. If you take this trade as well, at this point, this is the high of this very candle, and then you do 1 to 2 risk reward, you should be a massive profit. These are all short examples. Now let's do example for a buy. Okay, let's say for example this market buys. Remember what we are using as a trend direction is a super trend indicator. So let's say for example from here, market begin to buy. If you see something like this, don't. So market begin to buy from here. So on the lower time frame, I will go to this very area of 9th January 2023. So I'll go back to 9th January 2023. Remember, as at anytime you use this strategy, you can go back to the lower time frame and take your scalping trade or your day trading trade. The reason is because you are analyzing your trade on the higher time frame back to the lower time frame. So it works perfectly well. So at this very area, if you look at this point, market go up, all this area you won't take a trade, and then from here, if you see from here, market drop. Okay, market drop. Market has already been in oversold condition all this while. Oversold condition. So for you to buy a position here, market go up a little bit, come back down and go up again. So at this point is where you want to take a buy position. At this point, because market go down, go up, fail to create a low. For the fact that market failed to create a low, it means that there is a lot more bullish momentum, that the market is going to move upward. So from here, I would take a long position. Remember, stop loss should be at this very support. So at this support, you see that you have your 1 to 2 risk reward ratio. 1 to 2 risk reward ratio. It works perfectly. Okay. Now another example is, if you look at here, market enter into oversold condition, come out of oversold condition, and then begin to move upward. Market come out of oversold condition here, come down, fail to create a new low. So at the formation of this very candle is where I should take my trade, and my stop loss has to be below this very support. So I have to take a long position, which is a buy, after the formation of this very candle, and then my stop loss have to be below this very support, and then I calculate my profits. If you look at this, market did not come to our target to give us 1 to 2 risk reward. But somehow, maybe as at this time, you might have shifted your stop loss to break even. So let's consider that this market did not go well for us. Let's say the trade went bad and you did not get this trade right to the target. If you go down, if you look at this area, market come all the way down into oversold condition, come out of oversold condition, go back down. But if you look at this area, one thing very important, that you wouldn't have taken this trade. The reason is because market did not create a swing, that is a fail swing. If you look at it, market from here come down, enter into oversold condition, go up, come down again to create a new low. So we won't take this for a buy because it did not go in line with our rule. Our rule says that market should go down for a buy, go up, come down, fail to create a new low, then from here, as market is trying to go up again, they will enter the market, because this is how impulses move. Market move impulse, retracement, and then impulse, retracement, and then impulse. This is how the market moves. So we want to enter our trade in line with market impulses. So this is how you have to use this strategy. Let me look at another trade example again. Remember, when you have a strategy that is working, you have to stick to the rules. It's a must. You have to stick to the rules. If you don't stick to the rules, then you are doing yourself the most wrong thing ever in trading, because you will never be profitable. I say it again, you will never be profitable. If you win today, you will lose tomorrow, and so on. So this is how you use this strategy. Number one is that you must have to analyze from the higher time frame. For example, in this case, know the direction of the market from the higher time frame, and then you come back to the lower time frame. And then the stochastic setting must be percentage K have to be 8, percentage D have to be 3 on the stochastic RSI. Then you look for fail swing after overbought, for downtrend, and oversold for uptrend. 1 to 2 or 1 to 2.5 risk reward ratio is your arrow, and you have to, because you have to manage your money and your risks. Then the 15-year is stop loss at the previous resistance or support. Then the 16-year is the swing candle must close above or below the previous high or low, which I have just explained. Now let's look for other trade example. Let's say, for example, on this, which is November 2022, 7th. Okay, so I'll go here and look for November. Okay, so this was November 7th, 2022. Then if you look at this chart, this is November 14th. So November 7th is somewhere around here. Okay, somewhere around here. You can see it on this very bar. Market go down, will not take any trade, go up. I see the market coming back down again. At this point, market go down into this place. It did not give us any fail swing, because market is already down to almost oversold condition. So you're not taking any trade yet. You come to this area, market overbought, come down a little bit, come into this area, fail swing of this very level. If you look at it very well, let me increase it for visibility. Fail swing, market is still going down. This is where you need to take your short position after the formation of this very candle. So if I take a short position here at this very point, remember my stop loss have to be above this very resistance. So I put here at resistance. Very powerful strategy. I'm looking for 1 to 2 risk reward. Okay, so at this very point, I should have my 1 to 2 risk reward. Once I do this, I'm good to go. I get it, I'm off the market. Then, as market begin to move again, I will search. If you look at this area, another trade opportunity right at this point, market enter into overbought condition, come out, go up again, fail to create a new high, higher than this very high right here. So at the formation of this candle is where I am going to take this trade. So at this very point, either this candle or this one, I'm going to take this trade. My stop loss have to be above this very resistance, and then I'm looking for what? 1 to 2 risk reward ratio. It's so that this market should also give me what I want with 1 to 2 risk reward. Then if I move further, if you look at this area, market enter here, come back. Let me do this to show you that there is no holy grail in the market. Enter into overbought condition, come down, go up again, fail swing. So I should enter market at this very point for market to come back down. And then my stop loss have to be above this very resistance. So you see here, market come down and they hit us out. If you look at all the sells, the short position I've done, you see that we have only had 2 loss out of all the positions. 2 loss out of all the positions. This is a very, very clear significance that this strategy work 90 to 95%. 90 to 95% if you apply it very well. And this is a rule. Very simple. Higher time frame analysis, super trend. Remember, you must have to define your trend with the higher time frame, which is 1 day in this example, and then you go back to your lower time frame, which is 4 hour. Once you see this, in this case, you go back to your 1 minute chart for scalping or 5 minute chart for scalping and take your trade. Market is going to go in your favor. Or you go back to your 1 day chart or 15 minute chart for day trading and then you take your trade. Market is going to go in your favor. This is how you trade this strategy effectively. Now, if you go back and then you remove anything from this strategy, please ensure that you back test it. If you want to maybe readjust and remodify the strategy to suit what you want, please ensure you readjust it in such a way that it does not violate any rule. And when you want to take the trade, you ensure that you take the trade in line with the strategy you've laid out. That means if you want to maybe make some correction or modify anything with what I've given you right here. So this is how you can make this 50% per day scalping or day trading on your own without anybody else. Fresh knowledge about technical analysis, little knowledge about fundamental analysis, you can do this 50% per day scalping. Does it mean that if I have $50 in my account, I will be making $10? No. You have to do this with at least $500 and above. So that means that if you can't make $50 per day, you can still use $100 in your account and be making maybe $2 or $5 or $10 per day, depending on what you have in your accounts. So it means that this strategy will work even though you have the least $50 or $100 in your account. You have to be doing this on futures trading. So this is very important, guys. Now keep your question, because in the next 20 minutes to 25 minutes I will be giving you guys opportunity to ask questions before I end the class for tonight. So the next thing is how to be ahead of 99% of traders in the entire world. What you need to do to be ahead of 99% of traders. Very, very important. Now, before I go into this, I told you guys that Remy Trade, we have a very important course, and for the course of this training, I have personally, give discounts for those of you that will join us in our next batch of training. And this discount expired on the 21st of July, 31st of July, sorry, which is on Monday, not tomorrow, but upper week Monday. That's the 31st of July. So, and these are the prices. The beginner course right now is for 20k. At the end of this date, which is the 31st of July, it will go back to 35,000, which is $40. And the advanced course has also been discounted from $50, from 50,000 naira to 40k, which is $60. That means you can pay in USDT, BTC, or Naira. And then if you want to take both courses, mentorship and VIP signal group, that means if you pay for this very course, both courses, which is the beginner course and the advanced course, mentorship and access to this premium group that I showed you, which I will show you again, then 50,000 naira, which you can pay in installments, and then $90 if you want to pay in Bitcoin or USDT. So this is the price for this course right now on discount. Learn how to do effective trading. Learn how to do effective trading. Once you learn how to do effective trading, the money will automatically follow. Don't just jump into trading. It doesn't work like that. You must have the right education and what to do, which I am here to guide you to be successful like myself and other of my students. So we will add you to this very VIP Signal group when you choose to join the both courses. This is a VIP Signal group. You will be added here, and then we have another group here, which is a premium group, which is very, very important as well, which I am also going to add you right here on the Remit platform. And then one other important thing I want to mention is the advanced group. The advanced group, like I said, is where people that I have mentored for over the years, they are all in this group. And when you want to take the advanced course, that is where you take the advanced course. Remember, all our trading stored in the cloud. That means you can always go back to rewatch them over and over and over again. So these are the courses, and you can join us right now. Now, another thing is, if you want to also, you are very good in trading analysis, but you just find little challenge in trading right now, but you don't want training. You don't want training anymore. You just want to pay for the course, and then from there you are done. We also have the Signal group for you. Okay, you can join the Signal group and get whatever thing you want from the Signal group. So join us right now and be a successful trader. How to be ahead of 99% of traders. These are another important tips and trick you have to understand today. Now, the first thing you have to do to be ahead of 99% of traders is to know your risk tolerance. You have to know your risk tolerance. Very, very important. The fear of losing money is one of the key things that traders are being scared of, especially new traders. So you have to be prepared to lose little amount of money. If you want to trade, you must be prepared to lose some amount of money. So remove the fear of losing money. So let's say, for example, in all these examples we've been doing, you see, one thing that used to scare people about losing money or make them think they're going to lose money is because they don't have proper strategy in place. They have not considered their risk tolerance. Are they high risk person, low risk, medium risk? Where do you place your stop loss? How do you place it? Strategic market entry. All these things must to put into consideration so that you don't have to panic when trade is going against you, because you already know that losses is part of the game. So the first thing you have to do to be ahead of 99% of traders is you must know your risk tolerance. Be prepared to lose money. Now, the next one is that the answer in trading always change. The answer in trading always change. You know, in mathematics, the answer is the same anywhere in the world. If you don't know how to solve it, it's the same. In physics, the answer is the same. In chemistry, the answer is the same. In the world of trading, the answer is not the same. Just like we see right here. You can predict that the market is going to go up. A market will not go up. It is then for you as a professional or as an experienced trader to decipher either this market is still going to move up or it's going to come down. It is your job to do that. And these are the things we are going to teach you in details when you join the academy, which is very, very important. And then the next thing is that lack of understanding and lack of discipline. Lack of understanding of the markets. Yesterday, somebody contacted me and I was like, Mr. Paradise, I have a challenge on Binance. And I said, what's the challenge? He began to drop some questions. And I asked you, have you been trading? He said, no. He has made a very huge mistake. And I think that was about 186,000 is lost on P2P trading. That is why I always say go for knowledge first. Get little experience. Get a mentor. It's not necessary for you to enroll in Remit. No, that's not the case. You can find any person out there that can really guide you through the process so that you get the knowledge, understand the market. Once you understand the market, then the money will follow. Don't rush after money. Rush after knowledge and understanding, and the money is going to rush after you. So, lack of understanding and discipline. If you look at it, there were some time that market did not enter for us to take a position. We relax. Be disciplined. Just ignore it. The market will always give you more than million opportunities to enter again and again and again. Your job is to sit down tight and wait for when all your strategy, the rules in your strategy align. That is the only time you can then take a trade. If you do not align with your strategy, forget about it. Don't take a trade. Just leave it. A time will come that all the rules in your strategy will align, and then you take a trade. So be disciplined to that point. Don't just rush into trade, you rush out. No. Or you see little opportunity that seems the market is going to move to the upside, you jump into it, and then you jump out. So lack of understanding and lack of discipline will take you far behind of 99% of traders. But if you have the right understanding and discipline, it will make you to be ahead of 99% of traders. The next one is exits are equally as important as entries. Exits are equally as important as entries. If you look at this analysis that I was doing today, you see, I consider my entry first, and then my stop loss, and then my target. So I place the entry, my stop loss, I know where I should be stopped out, and I know the risks. Some of you will jump into trade, you don't know where you want to exit the market. You don't know the particular point you want to enter. You don't know where stop loss should be. All these things should be put in place. Trading requires you to strategically, follow a particular pattern in your strategy. Once you can do that, then you will be successful. Especially in crypto, you must be successful. I have been trading for more than 6 years now. I started trading in 2017. 2018, 2019, I was not profitable. It was in 2020, during Corona period, that I sat down and said, I want to learn. Let me learn what this trading is on my own. After taking a lot of lectures, and then I begin to learn, and I begin to understand what the market is with the help of a mentor in the United States. So please follow a particular strategy and a mentor, a community that you can align with for success. If not, you will find it very difficult to be successful in the trading game. So exits are equally as important as entry. So you must consider your exit, your stop loss, and your target. Very, very important. Now, random stops and targets, these targets will not help you in trading. Not at all. What that means is, let's say, for example, you just maybe feel that this market is going to go down, and then you just place your stop anyhow, and then you place your target anyhow, random. No particular rule. You see, in this rule that I showed you right here, I said 1 to 2 risks reward. That's the target. So if you are risking $10, your profit should be $20. If you are risking $20, your profit should be what? $40. So that when you begin to enter your trade, you already know where your target should be. Let's say, for example, in this case, we know all where our target should be before market begin to move in that direction after entering the position. So you must have to consider this thing because it's very, very important. If you don't do that, if you have a very sweet strategy without obeying these rules, you are not going to be profitable. I guarantee you. You won't. So random stops and targets will not help you in trading. Now, another thing is being easily influenced by news and opinions. Let's say, for example, you just saw one news somewhere, maybe on Forex Factory, or you go to Binance, you saw a news, or you go to CoinMarketCap, CoinGecko, or maybe you look at Crypto Compare, all those crypto news, and then you were analyzing that the market should go down. All of a sudden they said the market is going to go up. Then you now change your opinion. Market is going to go up. All of a sudden you will lose. Follow your strategy. Don't be too influenced by what you see on the social media or other crypto platforms. That is not a community. So be very, very strategic in your opinion. Don't be influenced. News should not take you away. No, it should not be like that. So the next thing is knowing what not to do. Knowing not what to do, which is very important. Knowing not what to do. So it is not how much you know what to do that matters. It's how well you do it. It's how well you do it. So if you say, I know how to trade, how well did you trade? You say, this my strategy is working. How well did it work? So it's not about knowing not what to do. Okay, I know that market is going to stop me out here. What you know to do, how well do you know it? So you must put this thing also into consideration. So knowing the markets you will be trading in. This is one of the most important things baby traders don't put into consideration. Knowing the market you will be trading in. We know that markets move up and down. You must have to define if market is moving up, making higher highs and higher lows. You must also know how to define market structure, knowing when market is making lower highs and lower lows, downtrend. Because as a trader, the first thing you have to do is to define your trend. And in Remit, you define your trend from the higher time frame, because the higher time frame controls the lower time frame. That is why in this strategy, you can see that I've already defined my trend from the higher time frame. So my strategy enters 90 to 95% of the time, which is very important. Know the market you are trading in. So you must have to trade in a volatile market. Trade in a volatile market. When market is not volatile, please don't trade. What do I mean? Let's say, for example, in this case, if you look at this area, you see market has been here for some time, within this region for some time. How will you trade this kind of market? How do you want to do it? The best for you to do is to relax. Don't trade, wait. Because you have to understand that markets move, relax, move again. So there are impulses, retracement in the market. There are swings in the market. So you have to understand that markets move, expand, squeeze, just in that formation. So after you define the market you are trading, which I said you must have to trade either in the trending market is trending up, or market is trending down. Very, very important. Then the next one here is logical and rational trader will struggle. If you're a logical trader or you're a rational trader, you will struggle. Why? The market is an irrational market. How will you apply rationalism with an irrational market? So if you want to bring the two together, it won't align. So since the market is irrational, you have to approach it what? Irrationally. If you want to use logic to trade crypto or forex or anything at all, you won't be profitable, you won't be successful. You will struggle along the line. Does this mean that I'm saying you should not be logical about trading? No. What I'm saying is that follow your strategy and don't be too rational. It won't work for you. For my few trading experience, I discovered that rationalism doesn't work. That means that in this case, you have to stay off the market. Know when to stay off the market. If you see that the market, let's say you are in the trade, let's say for example you're in the trade, market is going down. Logically, you already set your take profit here, your SLS, but market has already come down up to this point. But I've not hit your target. Logically, you have to wait for market to hit your target. But irrationally, you can take your trade, you can close the trade and exit the market because maybe you've seen something that signifies that market is not going to hit your target. Let's say for example, market go down up to this point but I've not hit your target. But you see reason why the market will not hit this target again. Maybe the market go up, come back down, fail to create a new low, and was going up again. Logically, you should wait for market to come here and hit it. But you say, no, let me close this position. It's like this market will not go down. That is, you are approaching the market irrationally, not logically anymore. So you must have to understand this thing for profitable trading. If you want to be successful, like I said, you must follow these rules. It will help you. I want you to be successful. And that is why I have personally created a community of successful traders. That is our motto in Remit, home of successful traders. All my students, which most of them right now are tutors in Remit. Most of them are tutors in Remit. And they are doing very, very well. So join us, and I guarantee you, you will definitely enjoy our training section. Alright, so before we end tonight's class, please, the good thing you do for us is to subscribe to Remy Trade. Then if you subscribe to the crypto channel right here, then you can also help right now. The link will also be dropped in the WhatsApp group, and subscribe to our Forex channel. On this channel, you will find quality Forex analysis. Last week, I think if the person is here in this group, in this training right now, you will attest to it. I gave a signal on this very Forex channel, and he made about $1,700 from a gold signal that I dropped. If you look at it, I have gold analysis here, which move in line. If you go and watch it, you can verify it yourself. There is nothing to hide. So help subscribe to Remy Trade Forex is very important for us. You are also just helping us to grow, and I really appreciate. And for those of you that are still around up to this time, it means that you have the zeal to actually move your Forex or cryptocurrency trading forward. So if you need any help, you want to enroll for our training, please chat me up or chat any of the admin up for the company's account details. Please note that Remy does not accept payment through any personal account. You pay into Remy Trade Limited account. That is the account we use for payment for any of our courses. If you pay outside to any personal accounts, then you are on your own. So thank you very much for staying through till the end of the training. And then the courses and the discounts start now, and I will be dropping them in the group right now. So thank you very much. I really appreciate. Then now it's time for question and answer. You can ask your question while I listen. So we'll do it in an orderly manner. If you have question, just raise your hand. Okay, Dominion, sorry, ask your question. Mr. Dominion, can you hear me? Ask your question. You can unmute yourself by simply tapping the mute button and unmute yourself and speak.
Okay, can you hear me now?
I can hear you clearly. Go ahead.
Okay, my question is, that strategy, can it be applied to the Forex market too?
Yes, it can be applied to Forex market, but you have to do back testing. Okay, I've only back tested this on BTC, USDT, and other cryptocurrency pairs, but it will work. It's the same charting. So what you have to do right now is to go back and then maybe Euro USD or GBP USD or USD JPY, put on your chart, follow the strategy and back test it and see if it works. I believe it will definitely work, but just back test it for confirmation purpose, because I have not done that. I have to be present here. Yeah. Okay. Victor, you can ask your question. Victor, Mr. Victor, you can unmute and ask. If Victor is not ready, Godwin, ask your question. Good day, thank you.
Concerning the super chart or what?
The super training indicator. Okay.
Yes. And the other, the one you say one should use on lower time frame.
Okay.
My question is it only applicable on we can also use it on mobile phone.
No, you can use on mobile phone. The indicators are the same.
But I've tried to. I don't.
What you will do is that.
I've tried to actually.
Yeah, what you will do is don't use Binance mobile. Okay, download TradingView from your app store.
I've tried severally to apply some of those signals, but once I tried a kind of, they will be trying to charge me that I have to subscribe.
No, what I'm using to teach you right now is a free TradingView account. I have not subscribed, so you can do it without subscription. Okay, what you will do is one of the admin will guide you, or one of my advanced learners will guide you on how to do that. Okay, and Mr. Godwin, and I also believe is that you are in our beginners class, isn't it?
Yeah.
Okay. So you are covered. Okay, your tutor, King David, will actually guide you through that process. So don't bother about it. Just relax and you get it done.
Okay, thank you.
Okay, the next person here is Peter. You can ask your question, Mr. Peter.
Okay, good evening, sir.
Good evening, thank you.
Please, thank you for your time and lesson so far, sir. Please, my question is, you said if we should do the analysis on as in if you use the super trend this thing to check the 1-day chart, that we can use it. Can we, since you have shown us how we can do it on the 4-hour time frame, can we do it on 15 minutes and 30 or so, or 1 hour and it will work?
Yes.
That's my question, sir.
Yes. What I said is this. Look at it. We are still here. Okay. Question and answer is part of the training, which I have to treat it very well. You see, market is going down. So, in as much as you see this very entry on the higher time, which is 4 hour, okay, once the candle close, the place you're taking the trade, once this candle on 4 hour close, go back to 15 minutes or 5 minutes and enter your trade there. Okay, because remember, the first strategy here is what? Top down. You are moving from where? The higher time frame to the lower time frame. So go back to the lower time frame, which after you've done this on the 4 hour, go back to 15 minutes or 5 minutes and then enter a trade immediately after the close of this on the 4 hour. Is the same thing. You get it now? Mr. Peter, have I answered your question?
Yes, sir.
Have I answered your question?
Yes, sir. Thank you, sir.
Okay, that's great. Sunday
Yes,
asks. Sunday.
Good evening, sir.
Good evening, thank you.
Yes, sir. My question is about what you explained about irrational. That some traders they make some irrational conclusion when they are trading. I want to understand it clearly, sir. No, if you have a target, just as you have explained, and you discover that the market is no longer moving in your favor, and you close the target so that you can make the little profit, and you say that one is irrational or is not good enough. That's my first question.
Okay.
Then the second question is this indicator. Sometimes the indicator in the higher frame, they are not always the same to the lower frame.
Okay.
Now, I don't know as a master in this field, what can you see and what can we do, to take our trade when we have different frame. I mean, indicator with different frame. That's my question.
Okay, thank you very much. Okay, the first question. One thing you have to understand, when I started in trading, they told me to follow the moving average. I mean the simple moving average. So I was following the simple moving average until I lost my account. You get it now? I lost my account. Now the same thing here, they told you to do what? To sell. If you sell here, or if you short here and buy here and be doing like that, you discover that you will fail. That is why in this strategy I marked out and I said, when markets come down, don't do what? Don't short. Allow the market to go down and come back and enter at fail swing. And then in this strategy again, if you look at it, I use a different indicator on the higher time frame. And then on the lower time frame is a different one. They are not the same. So if you are doing your multiple time frame analysis, you must do like this to be very perfect. Now to your first question, I said don't be a rational or logical trader. Don't be too logical in the market because the market is an irrational market. So let's say for example, if you take a trade and market is going down, and then you discover that market will not hit your target, about to hit your target, but you are not sure market is going to hit your target. Maybe with the way momentum is now going, maybe there's a reduced momentum number one, or you see market go up and come down and fail to create a new low. Market begin to move up again. You want to take a little profit. You are being irrational. That is, you are doing opposite thing from what you further saw that makes you take the trade to go down. So you are now being irrational about the market. You are not longer being logical because logic says that you should stay in the trade till this point. But with the condition of the market that you now see at the present, the market is no longer going that way. Because number one, maybe volatilities have reduced. Market will not hit your target anymore. Or market have gone up against you in this case and create a new high at this point, which is higher than the previous low, which means market have capacity of going back to the upside. These are things you have to look out for you to say market is not going to hit my target anymore. Because you cannot just say market will not hit my target because of fear or lack of knowledge or understanding. You get it now? These are the two things you have to point out. So if you are saying the market will not hit my target again, why? What are you seeing? Lack of volatility? Market is not going in my direction again because market is creating new highs. Opposite of what I saw before. So these are things you need to put in place. So when you're using an indicator, please don't follow indicator the way they taught you. This is one powerful secret. Nobody will tell you this one. Don't follow the indicator the way they taught you. You must have to decipher a particular mean of taking control of the market and be ahead. If you look at this strategy that I show you right now, I did not follow as indicator say, because indicator say once the market go below here, I should do what? I should short. But I said no. Market should go down first, go up again, create a fail swing, then I will now short. Opposite of what they say. Because you have to understand that most of the books you read and most of the videos you watch on YouTube, they are paid videos. Maybe they are paid books for people to maybe just follow this particular pattern. And they make a lot of baby traders follow a particular pattern so that they will stop you out of the market. But this is a trick, a hack that you can use tonight and be very successful. Okay, so another person, I believe I've answered your question, right?
Yes, thank you, sir.
You're welcome.
God bless you, sir.
You're welcome. Chukwemeka, can you unmute?
Good evening.
Evening,
Yes.
thank you.
Can you hear me, sir?
I can hear you, go ahead.
Please, my questions are, the number one question is, you were talking about when the thing creates a new high, when it creates a high, and then the next one becomes a lower high, then we can actually take a shot.
Okay.
What if it creates a lower high, and then you are about to take a shot, the next one that comes becomes higher than the first resistance, that is the first high. So what will happen in that situation? Should the person withdraw? Then this is number one. I have like up to 5 questions. I don't know. Should I ask them?
Ask two first. Ask two first. Then reserve the other 2. When I'm done with that 2, then ask another one.
Okay. Then the next one is, how do I relate the analysis of 9th January? Because you gave an analogy here. You were relating it to the analysis of 9th January 2023 to on a low time frame from the oversold, which is being moved by the bulls, to the current market condition. How can I relate, or if I should turn the question in the other way around, I would say, what will necessitate me to go back to January 9th, 2023? Or relate to how do I relate it with the current market condition in order to get what I want? I want to get these 2 first, then I'll ask the remaining three.
Okay, now the first one, market was going down.
Yes.
I want to take a short position, but at the point that market creates this high and then go down a little bit and then come up again to create another new high, will you still enter the trade because market already creates a new high higher than where you're supposed to enter the trade? That's your question, right? What you have to do here, remember, if markets go down, this is where you're entering your trade. So it is considered that you've already entered the trade before this move. You're not seeing what is happening here because this is happening in the future. So it will be a loss. It will be a loss for you. Now, another example is if market is going down, this is what the strategy says. Overbought. Market should come down first, go up, fail to create a new low. At this point is where you're entering the trade. So you don't know what is happening in the future. If market go down again in your favor, that's fine. If market turn against you, then you should be in what? In loss. Now, one thing you have to do also is, let's say your stop loss is here, as the strategy says, and market begin to move against you. Not being too rational or logical, you can close your position in little loss. Because you believe that, okay, market has failed to create a new low, which is what I was expecting, but now it's creating maybe a new high, higher than this high, and it's approaching my stop loss. Maybe it can hit my stop loss and I will lose everything. I don't want to lose everything. Let me just cut it short. So you've now changed from your former analysis because the market is dynamic. The next three questions.
Okay. The next three questions. The next the one of
the one of how to relate what happened where very, very far in the market. Let's say, for example, January this year, and what the current market price is doing right now, isn't it? You don't necessarily need to relate what happened in January to what's happening right now in the market. Follow the market trend. Let's say, for example, see where the market is right here. Then if we can find out January, January is somewhere, let me remove this. See, January is somewhere here. So how do you want to relate it? You can only relate it maybe with trend line. Say, I draw a trend line from here up to this point. I said market is doing what? Is going up. This is a very clean uptrend on the long term. Clean uptrend. If you want to relate it, this is the only way you can relate it, but you can't relate it in terms of price that happened here and when the market was at this point, January this year. So the only way you can relate it is maybe by trend, for example, number one. The second way is by resistance support. Maybe this area that was resistance in the past is now support in the present. That is the second way you can also do what? Relate it, either by trend line or by support and resistance. Because previous resistance can act as support and previous support can act as resistance.
Then what will actually necessitate us to maybe make reference to such a past, or do we just do it like a routine? Let me just look at it. Or is there anything that might actually in the market will trigger so okay, let me go back to this incident?
The only thing that can trigger that, like I said, is a resistance support. If I place a support, if I place a resistance here, see, look at this point. Which if market drop, it will become what? My support. That means if this market drop from here down to this point, it will become my support. But here was resistance at this point. Here was resistance. What does it imply? It implies that if market come here, there is a high chance of market doing what? Moving to the upside from this point. So I can possibly take a buy position from this area to the upside based on the fact that this was what? Resistance. Resistance market come down and move up again.
When I watch the video, I'll get more. Let me ask the next question.
Be very fast.
Okay. See, after you were saying something, said after like when we have a support, the red candle and the green one, after that red candle and the next candle forming is a bullish candle, but like having a hammer, having a grave touch, a grave sign, a gravestone sign. If one is to take a short position in that manner, is the person going to take like a very short position, because most times I normally see it after the support and resistance, maybe the red and the green candle are together, then the next thing coming out, we wait for the next candle to form. And imagine the next candle forming is a gravestone candle, like a gravestone or a neutral dodge forming. Then the next thing will be the red one, instead of going up as bull. Like what yes.
Chukwemeka, can you relate your question to my very topic today? Because if you continue to go to, maybe that is another strategy you're talking about. If you see, I did not talk about any particular candlestick pattern here. What I said is, for in this case, you see bearish presence. If you look at this candle, which candlestick is this? Which candlestick pattern is this? This candle and this candle is which candlestick pattern?
This one is an engulfing candle.
It's an engulfing candle, which is a bearish engulfing candle. This candle is a bearish. I did not talk about that. I only said you should see a what? A bearish presence go down. So it may not be an engulfing candle. What if I don't see an engulfing candle? I will not take the trade. No. That is why I did not put in candlestick pattern. But you, as a seasoned trader, you already know that, okay, this is an engulfing candle. And markets have high capacity of doing what? Coming down after having a failed swing. So ask your question based on what I've just
Okay. The next questions is about the limit market, the limit order and the market order. No, the limit order and the limit sell.
Okay.
When you talk about when you were teaching us about that limit buy, do you when we place the limit buy and we place it at a particular limit and the thing buys, you place the buy. Does the money from that the wallet exchange, the money reflects on this particular buy order?
Yes. What happened is that money is no longer in your account. That money is in the order book. See it here. This thing you're seeing here is the order book. This is the sell. Okay. This is the sell order book, and this is the buy order book. Once you place a limit order, what it does is that it goes to the order book and waits till that price is reached, and then it will buy for you or sell for you. So it's no longer in your. That is why you will not see it in your account. It's already in a position waiting for that very condition to be met. And once that condition is met, then it will take off from there, it will buy or sell.
And then it goes back to once the condition is met, it goes back to your exchange wallet.
Yes, it will go back to your wallet. It will now reflect.
Okay. The same thing is applicable to the seller as well now.
Yes, the same thing applicable to sell. Yes, the same thing applicable to sell.
And I think that should be the last question. If not, okay, the last question is, you were saying, you told us that we can make with $100 or $50, we can make is it a profit of $1 per trade or $1 per day or $2, something like that? I
said from this very topic, $50 per day scalping and day trading strategy. That does not mean that you can use $100 to make $50. It's possible, but to be on the safe side, you can use at least $500 and $1,000. But if you have $50 or $100, you can still use this strategy as well and be making maybe $1 or $10 a day, as the case may be. You get it? That means you trade with what you have. You must not have a $500 or $1,000 or $20,000 in your account before you apply this strategy.
Okay.
All right. So thank you very much. And the next person is Salisu. Can you ask your question? Evening. Thank you. Very fast. Very fast. Yeah.
So I want you to use the short position and the long position. I want you to go over again where our target should be in the bot and our loss should be.
You know what you will do? You will rewatch the video. Okay? Rewatch the video for the purpose of time. I can't go over the class again.
Okay.
Yes, just rewatch the video. The video will be available on YouTube before this time tomorrow. That is in the next 24 hours. The video will be available on YouTube, and the link will be shared in the various groups.
How can you link your MetaTrader 5, or is it now okay? Trading view. I'm talking about trading view. How do you link to Binance?
Don't link TradingView to Binance? No, I've not done that before. I have not linked TradingView to Binance before. Binance have TradingView on its own. See it here. Binance have their own TradingView. TradingView on Binance incorporated from the main TradingView. So why are you linking? Is there anything like linking TradingView on Binance? I don't think there's anything like that, okay? Because you already have TradingView on Binance. You are not linking, it's already there. It's there on the platform. Alright, the next person, is that all for your question? Is that all?
Yeah.
Okay, the next person is Victor. Can you ask, please? You're the last person. Victor, can you ask your question? You're the last person. Victor, can you ask? Alright, so.
Hello.
Okay, go ahead, ask.
Hello, can you hear me?
I can hear you.
My question is, how can one understand, my question is, how can one understand this technical analysis as a beginner? Secondly, how can you, assume for this day strategy, day trading strategy, is there another strategy that one can make at least $15 from who have a range of, let's call it $200 as a capital?
Okay. So this question your question are two in one. So the first one is, how can you understand technical analysis? It's very simple. All you need to do right now is to enroll for our course, so that we teach you from the beginning of market structure, resistance supports, you understand market cycles, you understand candlesticks, candlestick pattern, chart patterns, how to use the indicators, and then you come back to advanced technical analysis, top-down analysis, supply and demand, other blocks, a lot of things you have to learn to properly understand what is going on here. Like I said, it took me 3 good years to understand this. But if it had taken me 3 good years and I am mentoring you, it won't take you that much. 3 months, 5 months, you are good to go. You will know how to do this thing very well. So the first answer to your question is that enroll for our course and be trained how to do technical analysis. Or you can find somewhere out there that you know that is very good to teach you how to analyze your market technically, and then you start from there. Now, concerning strategy, there are a lot of strategy out there that you can use that can give you maybe $5 or $3 a day. But I would advise that you do back testing on any strategy you are taking, either from YouTube or from a friend or from a mentor. Anything, back test it to ensure that it better suits your trading psychology. Because what we do here in Remit is to train you in such a way that you can develop your strategy. We teach you in such a way that you understand the market and develop your strategy from it. This very one that I've taught you tonight, you can also apply it and make $5 or $10 a day from this very strategy as well. So anyone you want to do, you can go out and source for a strategy, or you can use this one to make $5 or $10 a day if you have maybe $50 in your account, or $100 or $200 in your account. Hello, Mr. Victor, did that answer your question? Alright guys, so like I said earlier, you can enroll for our course right now and be in the trading community. Please ensure you subscribe to our channel. Just take 1 minute and subscribe to Remy Trade Forex, and then also subscribe to Remy Trade channel as well. These 2 channels, we want to make it grow, and we need your help to make it grow. So this is one of the things you can do for us right now, even though you don't take our course, to appreciate this very trading section. And then you can also be in my community. This is the advanced community, where people that have gone through the beginner course and the advanced course, this is where they are. And I can guarantee you these guys are profitable, and we are about 221 participants, members in this group right now, and they're trading and they are profitable. Not only that, you will receive trading knowledge, news, and you will be on top of the game as a result of good fundamentals are being sent to this group by our students, people that I have trained over the years. So join us by taking our course. You can take either the beginner course or the advanced course. All those courses are now in the group right now, and you can see it right away. So okay, I think one person have a question here. Jeremiah, I just give you that benefit of doubt. Just ask a question very fast. Mr. Jeremiah, can you ask your question? Hello, Mr. Jeremiah, are you there? Okay, so that being said, you can also subscribe to our Signal service. Like I said earlier, these are our services and you can enroll for any of these services. Cryptocurrency training, you can come for forex training, cryptocurrency signal service, forex signal service, and account management. So thank you very much for sticking around up till this time, and it means that you are actually interested to be a successful trader. Thank you very much. I really appreciate. This is Remy Trade Academy once more, and we are a home of successful traders. So join us and be very successful in your trading, and we will also lead to profit and take you to your success in this trading journey. So thank you very much. I really appreciate that you find time to be here and you are around till the very end. Thank you very much. Like I said earlier, the video will be available on the YouTube channel and the link to the video will be sent to the various groups. Thank you very much. I really appreciate, and God bless you all.